All right, welcome to the podcast, mate.
Thanks for having me along.
Yeah, no worries. Now, mate, I've asked you look, we've obviously known each other for a while, and now I think, did we meet in Melbourne originally, or do you reckon?
I think, I'm not sure if that's the first time we met, but I certainly remember meeting you. You came in, that was in the NZX days. And
Back when you were at St Kilda Road?
Correct, and I was running Pro Farmer and Australian Crop Forecast at that point, so putting market analytics out into the market and giving people some interpretation around that. And I think that's when I think we might have grabbed a coffee around that, right? And you sort of gave me the bit of a backstory around your conversations with the with Clear way
back in the day. So this is in the early days. So I suppose I'm better introduce you properly. So you're the managing director of Clear Grain, which is like a grain exchange. You're going to explain this better than me, but an online grain exchange. Tell us about Clear. So this is way back when we're talking about meeting Melbourne. We're talking. So how did the Clear Grain? So can you tell us? So the Clear Grain Exchange is a pretty established company now. So how did it come about, and how did you get involved? Really?
Yeah, thanks. So it was a startup way back in 2008, which was before my time with the business. A lot of industry people came together to create that startup, as well as people from outside the industry, but with tech, software development expertise. So 2008, different world back then. I mean, if I reference my dad, Timmy Cattle was still working out how to, transfer $5,000 from his savings account to his Streamline account online. That online banking wasn't necessarily the norm, and we had dial-up internet and the rest of it. But, and this is me not being there at the time, but this is my interpretation of what I think the premise was. And they came together and put together, thinking that, there's a lot of sort of analog processes that's involved in a grain transaction. And can we simplify that? Can we help buyers and sellers find each other? Can we make those processes of negotiation, potentially some asymmetric information in the market, but then also, just streamlining the whole paperwork trail, integrity around contracts, making sure levies and disbursements are paid correctly, import royalties, things that the industry really functions on. Some of the boring stuff, if you like, but is actually so vital to the industry. I'm probably talking more about my own experience, what I'm passionate about it now, but I think, it was a startup back in 2008. It ended up selling to the New Zealand Stock Exchange in 2009. I joined the New Zealand Stock Exchange business in Australia. So New Zealand Stock Exchange is a story in itself. They came into the Aussie market. Their expertise are running markets, right? And I think under the leadership at the time, I was like, well, let's expand outside of the New Zealand shores, potentially. Agriculture, sort of seeing that there's a lot of market inefficiencies in agriculture, that's reality. And a more efficient market creates more value where everyone benefits. So they brought Clear, which was what it was referenced to at the time, Clear, and then a lot of information businesses around that, being Pro Farmer. You might remember Keller Downs, which was Malcolm.
So it was all in one thing, wasn't it? It was the first time you sort of like, when I went in there, it was like, you had Pro Farmer in there, you had the Clear, what I call the agri side of Clear, then you had a whole software team in there as well. So it was like a real mixture, wasn't it?
It was, yeah. And then when I entered the business, I'm just trying to think of the year. It must have been around 2011 or thereabouts. No, it'd be later than that. Anyway, I came in, it would have been about 2014, so thereabouts. Anyway, and I was running the information business, and then I ended up running the Australian entity for NZX, which included all of Clear Grain Exchange. So that was 2014, and that was when I I really started to, deep dive and try and help pivot the strategy in Clear. Because at that point, Clear really hadn't, in my view, it was a bit misunderstood by the industry in terms of what it was trying to do. It was perceived as a broker out there, is how I'd say it, with a lot of good technology. And the pivot point was to understand that actually what we're trying to do here is be an independent exchange, and that's quite different. So, an independent exchange is not a buyer, it's not a seller, and it's not a broker or an advisor in the market. It is not an exchange's role to have a view on price. It is our role to help buyers the whole function is to try and bring buyers and sellers together to trade at a price. It's up to them to determine their price, via a bid and an offer, and get it out there.
So it's trying to grease the wheels of the market in a way.
That's right. And, it is our role to disseminate price information and to help educate participants around how a market functions. Because I'm sure we'll get there during this, but I think growers have often referred to themselves as price takers. I was actually catching up with, I was at UWA only about 2 or 3 weeks ago, and I said, I don't think it's good language to say, growers are price takers. Well, if you start thinking about that, everyone in the world's a price taker when it comes to grain. Yeah. So,
but in the case with many things, isn't it? I mean, reality is, if you talk marketing, economics 101, it's often acceptance at the end of the day. And as soon as you accept anything, you're a taker, really.
Yeah, I think it's more a reference that there's so many things impacting price that we feel like somebody bids us a price and that's the price we need to accept on a day. That's what it's
more of a reflection of power rather than trade. So the comment is more of a talk to market power. It's more of a proxy for a reference to market powerlessness, or the feeling of powerlessness, isn't it?
I think that's the reference that comes from those words. That's the feeling or the emotion that comes from those words. When actually growers do have a same price. There's a bid and an offer in any market. And the price discovery point that we've often been using is the bid price. But actually it's the traded price that, is the real price, and growers have a say because they get to offer.
So let's drill on that. You mentioned just before, and in preparation for this, I was really, I was going to talk about it a bit later on. I'll talk about now. I studied grain marketing under Dennis Wallace when I was at uni, and we're talking, it seemed like the other day, but it's in the early 90s, we're talking 89, 90, 91. And at the time, not much had changed other than it was a fully deregulated market at the time. We were, I think, when did AWB deregulate? Probably somewhere in the 90s, didn't it? Yeah. Anyway, it was a whole different world. And I, as a farmer, grew grain and sold grain, but I really used to pretend that I understood what I was doing. I had no bloody idea in reality because of all the stuff you talked about, the complexity of a functioning grain market. Even concepts which I'd say are grain trading or grain marketing 101 like basis, I had no idea what it meant. And if anyone listening to this is honest, there'd be half the people going, shit, I don't know what it means either. So can you take us through, without, I suppose, getting too far in the weeds, but the mechanics of a functioning grain, let's say anonymous, just a player A and a player B, a buyer and a seller. What are all the things that have to happen for a grain to be traded in the world?
So grains trading at all different levels within Australia, at a free on board level outside Australia, at a CNF level, at a destination, and then all that's happening at all different parts around the world as well. I think just to bring it right back, a functioning market has a bid and an offer in it. So a bid being what a buyer's, putting out there to sell, this is what I'm willing to pay, and an offer being what a seller's willing to sell at. And then when they meet, a trade happens, and that is your price discovery. So that's the first premise, because I think, like for a lot of Australian growers, often reference to, we often say, well, what's grain worth? What's Australian grain worth? And I think a lot of the starting point for Australian growers is well, this is the price that buyers are showing me, via text message, via independent page, collecting all the published bids that have been put out there. But that's a bid price.
So
and any market has a bid and an offer.
is that because, actually, I'll pull out the stats because I want to talk about these big players, right? This is perception of what we're talking about. There's a bid put out there, and that's what it is, right? And so is there some very large, so you've got, I came across this acronym the other day, the ABCDs, what do they call them? The major players, your Archer Daniels, your Bungie, your Cargill, your Louis Dreyfus, those type of things. Do they tend to be able to, are those bid prices and that pricing dominated by those players, or is it a bit more complex than that?
I think, naturally you've got some buyers with high market share than others. I think if you look around most parts of Australia, growers would typically be selling to just a handful of buyers. And there's reasons for that. I need to, as a seller, if I put myself in grower's shoes, currently the way I sell grain is one, I have to negotiate around it. Like most contracts are verbally binding contracts, and Grain Trade Australia does a great job of underpinning the integrity of grain contracts in Australia. We're really lucky as an industry around that. But part of that is they are verbally binding contracts, so you think about that straight away.
So you're on the phone to the trader, you've been rung up, and you go, Nathan, I want to take your wheat for, $4.10.
Well, let's just step through it. For instance, so grower grows grain, needs to sell grain.
Yeah.
So they go, okay, I think I'm probably a seller around $400 a tonne, wherever that is, around Australia. They're watching the bids come out. This is sort of how a lot of grain's transacted today, right? They're watching the bids come out every day. How are they collecting that bid price discovery to start with? It might be via SMS, it might be via, it's often via more than one source.
Yes.
So it's quite stressful. I'm looking at it every day. Currently it's the 370. I'm not really a seller. Don't do anything. Now it's the 380. Date's getting closer. I'm looking at it. It's at 390. It's hit 395. Oh, should I engage? Oh, I didn't get around to it. I was busy on the sprayer. Now it's dropped back to 390. Oh, bugger, why didn't I engage when it was at 395? It was getting pretty close. Okay, now it's back at a 398. I'm going to start ringing around buyers and saying, hey, I'm a seller at 400. If you can get to 400, or what's the best price you can do for me today? Buyer might say, mate, I can do a 398. It's the best I can do. You ring to the next one, you ring to the next one, you ring to the next one, or you're sending emails out, whatever it might be. Then the best bid you get was at 398. So you go back to that buyer. Buyer says, no, mate, we've got our fill for the day. I've already bought it. Now I'm back to a 395. I'll bugger going to the next one. So that's a stressful process for growers or their agents and brokers that are doing it on their behalf. But it's also, the buyer's feeling a bit like I'm being played off here, like it's not transparent, and then if you get to that point, that's just getting a contract done. Then you get the contract done, and again, it might have been verbally binding, or it might have been via a few sentences on email. So then we've got to wait for the confirmation to come out. Is that all correct? Is everyone checking that? Then we typically transfer title of grain and wait for payment as unsecured creditors. And that, knowing that is happening, straight away impacts your behaviour at the start, because you're only willing to sell to buyers that you're comfortable with selling to. As a result.
Because in reality, anybody could come and say, hey, no, it's not like, keep the ton of ground off, I'll give you $400. But can I do all the rest?
Yeah, so growers are rightly critical of assessing counterparty risk.
Yeah.
So that's the function of an independent exchange, is going, right, rather than waiting and seeing, be proactive. If you're a seller at 400, even if the bid's at 370, get your price out there so buyers can see it and know it exists.
And does that give you because as soon as when you're going through all that, like I had this experience, a number of years ago, I was at this top of this hill on the Kokoda track, believe it. We were like, I don't know how many miles from the nearest bit of civilization, the top of the Idama Ridge, and suddenly I was there with a bunch of grain growers from from Badgingarra. And suddenly their phone, ding, 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 right on top of this ridge, all grain prices coming through. And their phones, and suddenly their minds, they're in the middle of the Papua New Guinea jungle, and suddenly they're worried about grain pricing.
Yeah, do I, don't I sell?
Yes, so this whole conversation between these three growers on top of this hill in Papua New Guinea was about, grain bids.
And what bid did you get? And, the outcome of that process is that neighbouring growers might be selling, and often are selling, the same grade of grain on the same day at different prices.
Wow.
Well, that's reality because they don't know.
Well, it's a bit like
Right, so it's,
yeah.
and so the whole concept is, this isn't our concept. This is independent exchanges, what they do.
But it's the same as even trying shares, really, isn't it? Like,
so get it, get the price out there. Buyers can see it. Every buyer can see it. They crunch their numbers, try and buy. It actually creates demand. Often, the bid might still be at 380, but it's selling at 400.
So what you're saying is you might say, I've put my price out there because you're doing this without essentially. So as soon as you're going through that, I was thinking, God, I'm keeping, okay, how many people have I got coming in at me, right? And so immediately what the nerd in me goes, okay, there's a spreadsheet and I've got Nathan giving me this and James giving me that and Fionn telling me this and da-da-da and trying to keep all these bids playing. And in reality, you're not going to do that. Right. So you first of all can't keep track of bids. You don't know where them. And the other thing is, do you ring up all five of them and tell them they're at 400, or do you?
And that's where we end up with 5, right? Like, just last week, 53 different buyers bought grain through the exchange.
Yeah.
Another 56 were searching for grain to buy, but couldn't find grain that they either needed, or they found it, but they couldn't reach the price that was being asked by the growers that were offering, which is fair enough. So, but at least they know it's there, it keeps them interested. But the point is, we're in the West at the moment, so I'll reference that. But we put it in the Farm Weekly each week, but I'm pretty sure last year was about 56 buyers bought West Australian grain, just like through the exchange. Now, if you ask growers or their agents for that matter, name me 56 buyers. The point is those buyers have always been there. It's the way there's been plenty more buyers that want Australian grain, West Australian grain, than the 5 or 6 or 7 that buy the majority from growers. It's just they've had to buy it off those buyers that are buying the majority from growers.
And also you don't know. So for example, you might, as a farmer, might work with maybe 2 or 3 that you know well, or they know you well, right? So in your example of putting 400 out there. So what you're saying is, like, if I put 400 out there, the three companies I normally deal with are probably, maybe they've filled their ship or they don't really need it today, so they're not willing to go there. But you're saying there might be another 52 people sitting there going, yeah, I'm good at 400. I'm actually just entered the market today, and that'll be really good at that grain.
Yeah, I think, you say 52, what is that? There's more than 300 registered on the exchange. The point is there's more.
There's more. There's someone who know ready to go at that price.
Exactly. By you selling your grain that way, how do you're actually reducing your potential buyer pool. And the reality is, as growers are becoming more and more familiar with the practice of offering grain for sale at a price they want and getting it out there, more buyer, the numbers on the exchange, there's more buyers that are able to participate in buying grain. So those numbers, 56 last year, the year before that would have been in the 40, say high 40s, the year before that might have been low 40s. So as more growers offer grain for sale, those buyers have always been there. It's just they're actually able to participate in buying that grain from growers. So that's a cool thing.
Does this, though, when you look at the screen, you've got all the bids there and you sort of get a feel. Do you get a feel for what the market's doing? So one of the age-old problems of us, I'm putting back 20 odd years ago when I was a farmer, it's a greed fear cycle. It happened in the wool market, it happens in the grain market, this idea of, you gave a great example early on. I'm good at 14, the market's gone to 390 shit. And in my head, I've lost $20, right? So now I'm going to hold out bugger, right? And then it drops to 380. And does it help manage that, or is that just a reality of a human condition? You know, this greed fear cycle that we have with our commodities.
Well, I
But
think
the fact that there's a whole lot of pricing there, does it go, okay, I know I'd love this, but this is sort of where the market's at the moment?
yeah, there's a bit of that. Yeah, I think hope, greed, fear, panic is a function of like human culture, but I think what it allows you to do is rather than keep getting swept up into that emotional hope, greed, fear, panic cycle, is that all your focus, because you're not having to hunt a price and negotiate and haggle and do all of this, all your focus can be centered around what is the value of my grain.
Mm-hmm.
So you put your time into that and get it out there, knowing that it's going to trade. And by the way, like we've talked a lot about bringing more buyers into the market. The other function that an exchange does is settle it securely. So, you know, anything that trades through the exchange, growers retain title of their grain until they get paid. You know, there's a settlement function as well, which is critical to the...
So it removes that ambiguity around that middle process.
Well, that allows, you know, they don't have the counterparty risk, essentially. So that allows them to be confident in getting the grain up there. They're also anonymous, so there's no bias in the market, potential bias. Like it is, to run an exchange, you need that independence. And independence is an overused term, but mate, it is critical for the fundamental functioning of an exchange. To get the whole idea of an exchange is to try and get that real price discovery, bid offer. There's no bias in the market. All the logic on first in, first out, market hours trading, secure settlement, anonymity, all the logic and the thinking that goes into it. And this is what I've learned from my time under NZX, NZS, because this is what I'm deep on. Is how to run a market and make to play its role, which is helping buyers find sellers and sellers find buyers, essentially.
So where does it fit into, I suppose what I'm thinking about is I'm a grower, and I grew up in the era where we got most of it, you know, CBH, grain ball, wheat board, you know, that was, you know, I haven't farmed since 2000. Right. So I'm a bit out of the loop, but where does something like the Clear Exchange fit into that whole grain marketing strategy? So I'm out there and I'm a grain grower and I'm anywhere in the Australian wheat belt and I've got X thousand tonne to move, and you've got essentially the price discovery stuff through Clear, you've got your traditional, I mean, you've got all those other products, all your pool products and your contracts and your derivatives. So where do you feel that the exchange fits into, you know, where do I sell my grain? Because it makes a lot of sense. You're explaining this and I go, well, that makes sense.
Yeah.
But there's a lot of other options. And so where does it fit into my marketing mix, I suppose, do you reckon?
Well, I think, you know, we always talk about ourselves as we're a tool in that market. But, mate, my hope would be that there's no downside in giving this a go. You know, like it costs nothing to have an account. It costs nothing to have your grain up on offer. If it trades, we charge a fee, which we disclose up front, and we always say factored into your price. So, you know, if you charge $1 a tonne on your offer, if it sells, only if it sells, you want 400, put it up at 401, you know. But so where does it fit? I hope that there's also the behaviour that we encourage is, so I would hope every grower has an account, you know, like why wouldn't you have the tool in your toolbox at a minimum? And then secondly, I would hope that there's not a lot of like, you know, we run this business, obviously I'm biased, but the whole objective here is we're making it as no downside for growers to also put their grain up on offer and get it out there. You know, they're anonymous at all times. If it sells, it can only sell at the price that they nominate. Mm-hmm. Sometimes it'll actually sell higher than the price they nominate because on market open, if you've got buyers outbidding each other, it will sell up to the top bid. It's functionality that growers might not know about, but there's protection measures in place there, and if it sells, you retain title until you get paid. And we actually encourage, if you get a bid outside of the exchange coming directly at you, because a buyer says, mate, I've been dealing with you forever, I'm in a tight spot, I need the grain, I'm only offering this price to you, I don't want the rest of the market to know about it, and we know this happens. That's okay. Just say, mate, just bear with me a tick, cancel it off the exchange, and then sell it to them as you normally would. But, it's cost you nothing to have it out there, but by having your grain out there on offer, you've given every buyer in the market the opportunity to try and buy that grain and have a crack at it. So if there is an anomaly in the market where a buyer wants to bid more to you specifically, you've got that opportunity. We say, well, make sure you grab hold of it, but it shouldn't be a deterrent to still having your grain out on offer.
So is it, a lot of the grain marketing products over the years have really been able to have a lot of different bites of the cherry, because people often sell their grain over an 18-month period because of the natural fluctuation within the grain market. So that price discovery remains a challenge, doesn't it? You go at that question you posed right at the beginning, is what is Australian grain worth? Because you look at Chicago or what other global wheat pricing market, and then you look at what I'm going to get on farm gate wherever I'm in Australia, and you've got a massive difference. And so how do I as a grower go about trying to go, okay, so I don't get stuck into this greed, fear, panic cycle. Like, okay, if I want to aim at a number this year, how do I try and put that number together in my head?
Yeah, what is Australian grain worth?
What's
my
Australian grain
APW worth in Quinana, as an example? So, mate, this, I think, I'm not going to answer this fully here, but I'll pull it apart a bit. But I think this is where, ideally, all growers and their grower agents are just able to spend their energy on exactly answering this question, rather than trying to hunt for bids and negotiate and then, make sure counterparty risk is okay and all of this. So this is nice. This, I think, is the opportunity to try and answer this. How do we do it? Australia is an exporter of grain. If we just focus on the wheat market, because that's a bit easier for reference, but we're a top 5 exporter, so we're influenced by the global market. That's why other things that are going on in other exporting countries is relevant to us. So the US, Canada, Black Sea, Ukraine, Russia, Europe, also an exporter, and Argentina, if you like, the biggest one. So that's why weather conditions, crop conditions is all very relevant in those.
And those of you who are probably just to add in that way you're going, for those of you who aren't in the grain market, just a little bit of context. And I was saying to Nathan before, I did some research. So wheat in itself, 784 million tonnes a year grown around the world. We only grow 4.6% of it, so we're a tiny grower, right? But like you said, we're a top 5. So in 2022, we're the top exporter of grain in the world, 15%. So the US or Canada were doing like 11 or 12% in that particular year. So like you said, we might be a little country and we grow only 4% of the world's wheat, but we're a big player in this global market. So we're very market exposed, aren't we?
Yeah, and 2022 is probably a nice reference year in that there were problems happening in the other major exporters. Australia, if you think of Australia as a whole, had a really strong position to influence global prices because we were number 1 exporter.
Does that mean when we're in an exchange, so when a buyer comes and they're wanting volume of quality grain, that just pumps our tyres a little bit?
Well, herein lies, I think, the improvement in the industry that is ahead of us, I think, as we keep maturing. Because, I remember back in, 2022, and we went through a couple of years there where I think if you talk to a lot of growers or their advisors, they were sort of saying, well, Aussie prices are at decile 10 prices, which is, sort of like the top 1% of prices that we've ever seen in the last however many years they're running those deciles off. So it felt like a really strong, healthy price. But actually, if you compared our prices versus the rest of the world and where things were actually trading, we were at a decile 1 price. We had never been at a larger discrepancy below where global prices were trading through those years.
So you might be able to give me some numbers around this, but I remember there was you can explain basis as well when we do that. But the basis between, say, gelatin and Chicago was $150 or something. Was that, is that right? Like,
Yeah, and I think
huge.
it was, mate. But I think like Chicago Board of Trade has been, we often reference it,
Yeah.
and when people talk basis, so what is basis? Basis is simply how is the Australian grain price comparing to Chicago Board of Trade if they're using it? Because I think that's become a complicated concept by this whole basis.
Gap.
Yeah, but actually, it's just, but the other, historically, and it's not just Australian traders and Australian growers, but globally, Chicago Board of Trade has been a really strong reference point on price as an indicator of what the global price is, right? And the reason for that is back in the 1960s, US was 50-60% of global trade, so most exports that were going into the world were coming from the US. So that became the focal point benchmark, and they were obviously leaders in creating an exchange to create some price transparency. Now the US makes up, I think you referenced 12% in 22, and obviously that fluctuates up to say 25%. So much less. We've got bigger more supply now coming from say the Black Sea regions. Australia has basically maintained its probably influence.
Does that happen across all grains? So we're talking particularly wheat here, but oilseeds. Those sort of, because oilseeds are having a big global moment at the moment, whether that be soy or canola or whatever.
Yeah, it's different. So different players there, so Kiwanis is an example because that's a big influence on the wheat price. Your major suppliers there are, US, Argentina, Brazil, and I'm missing one other off the top of my head there. Ukraine. So, slightly different but similar.
So the exchange dominant, like when I'm talking about, so my references are all, but when I was a farmer, growing canola, Winnipeg was the thing everyone used to reference, and that was out of Canada. But I don't know, it's the power imbalances around the world. Like Chicago used to be a big player. Winnipeg obviously was a big player. But to all these grain pricing benchmark places, have they all moved these days because there's a lot more production coming out of other places in the world?
Yeah, I think you're leading into exactly what. So, why was Winnipeg a benchmark for canolas? Because Canada was a major supplier and still remains so. But we've seen this dissemination. Then you've got businesses like Platts or Argus, as an example, which are actually trying to bring more transparency, because now all of a sudden it's relevant what the price is trading at out of the Black Sea or out of the EU or out of, as that mix sort of starts. Now that's becoming more challenging to find out, well, what is Aussie grain worth? I mean, mate, the best measure, in my view, of how we determine what Aussie grain is worth is what physical cargoes of Aussie grain are selling for in the world market. Now that's quite difficult information to get hold of, because obviously it's,
so we're talking like ship loads.
Yeah, like 100,000 tonnes feed wheat's been sold into the Philippines.
Yeah.
What price?
Yeah.
How do we find
So
that
what
out?
are they load the ship for, basically?
Yeah, or if it's been a trade done at a delivered destination, delivered to port, then what was that price, and then we can convert the exchange rate, we can put freights onto it, we can put loading costs of thing, and we can work out what that trade equivalent is at a quinone. Now that is still a clunky measure in its own right, just like Chicago is a clunky measure on its own.
But in that saying, is that Chicago, and me as a grower, in this case we're just talking wheat in that case, but these are all easy measures. When Chicago used to dominate the wheat world, it was a nice, reliable proxy for price. But like you're saying, is that for not just wheat, but all seeds? This is becoming a lot more complicated now. So it's a lot harder to do price discovery now than it was.
Well, I think there's more opportunity for improvement, is what I'd say. Is it becoming more complicated? Possibly not. Is it becoming harder? Possibly not. But we do need to put the effort in. And this is where if we can free up our own mindset rather than thinking about, grain marketing, which, you use that term, and a lot of growers, I don't like it. Like I like growing the stuff, but grain marketing, it feels overcomplicated. Whereas we sort of, so we like to use a term where you're actually selling your grain, you know, and you put all your effort into growing.
You're not branding.
Well, not yet. I mean, that might be, you know, further down the track. But you're not, you put all the effort into growing it. And, you know, growers are amazing at making the most of their resources. You know, like excellent business managers, excellent risk managers. But then we constantly see just giving up that $10 or $15 a tonne that might be on the table when it comes to selling on a day. And I feel if we sort of think about it, put more energy into trying to work out, well, actually, what's Aussie? So that example back in 2022 when we had, you know, Aussie prices felt really high, strong as they've ever been, but the global price was actually right up here. And that gap between the global price and where we were has actually never been higher. And now, what was driving that, in my view, a big drive. So people often talk, well, actually, we grew more than what we could push out, you know, onto the export market, and 100% that is having an impact.
So we just had too much supply.
Correct. However, in my view, if growers and their agents had a better understanding of where the global price was, there was plenty of opportunity to be asking more for the grain that they were selling.
So you say there's value left on the table.
Yeah, and I mean you can't criticise a buyer for buying grain. Yeah, a buyer should only be bidding what you're willing to sell to them for. You know what I mean? I mean that's their role. So, but growers need to realise that they also have a say in price, and they can offer it out there and send that price signal quite strongly to the market.
But it is, like you said, you know, I don't know if price discovery fits in the same thing as grain marketing, but that's what it is. Like if I came to you and I go, you know, straight up negotiation, I go, you know, Nathan, I want to buy you wheat, and you go, no, I'm at 430, and you're kind of like, no, we're miles apart, you mate. And I come, I'll go 380. You go, no, all right, I'll come to you. You know, this is like Gumtree, really, isn't it? It's like, no, I'll go you 410. Right?
Yeah, I think.
And so, you know, like, but if you say yes at 380, I'm taking it at 380, thanks very much. You know, so so should growers be willing to, like you say, they might put it up on the exchange for a bit more than, you know, they might get a little, but at least they'll find out whether they're in the ballpark or not. You know, like.
Yeah, so it depends on how quickly the grower needs to sell.
Yeah, so there's a liquidity.
You know, and I think that's, you know, you can't, it's all well and good to say, well, we get a certain price and I'm going to put it at 500 and the market should come and meet me, you know. But that's, you know, again, it comes back to, well, what is Australian grain worth, and putting your energy into what do you think it's actually worth. Now, that might change day to day, week to week. And then you match that up with when you need to sell. Well, obviously, if you need to sell in the short term, you put your offer closer to the bid. If you're not in a hurry to sell, well, put it at any price you think it should trade at, and you might have a view on the market. You might have, however, you've come to that conclusion. But still get it out there, because then buyers know that it exists and it keeps them interested in trying to buy that grain.
And also there's all those other on costs. You're talking about, you know, we're talking about the cost in the market, but there's all the cost on farm. You know, like for every month you store, either whether it be in your bulk handling, paying your fee, or whether you're storing it on farm and size, you know, that's costing you, even if it's just not storage costs, which would if you were doing it somewhere else, it's costing you interest. Right. So there's that growers are always having to do that sum in their head, aren't they? Like, do I take 380 today or hang out for 400, and how many months can I store it before, you know, I've done that $20 in interest or storage costs, you know, so there's always those calculations as well, isn't there?
Yeah, and I think, you know, there's plenty of businesses out there that help, you know, determine that, you know, like that advisory space, and a lot of growers sort of click on it, you know, it's not unusual to be held, to be paid a carry in the market, etc. So, you know, but that's how, you know, I think the market's evolving. quite a bit, and we're just trying to play a role in that to help provide some transparency around price discovery. It's relevant what prices are trading in WA versus Victoria, as an example.
Yeah.
Like there's a surplus of wheat, it's all going export. So if Victorian ASW is trading at much lower prices than Kwinana versus, say, what you would expect basis on real execution costs, in my view, that's something that Victorian growers should be in tune with and say, oh, okay, there might be room for us to be asking a bit more. So it's more about them, trying to, again, establish what their grain's worth.
Is it because the East Coast in particular, so we're talking, two sides of Australia. One thing we're talking about Western Australia in particular doesn't, and I don't know much about South Australia's export market, but the growers in the West Coast export the vast majority of their grain, whereas on the probably the three largest eastern seaboard states, they've got a bigger domestic market. Does that impact the market in any particular way in different states because of that larger domestic market?
Definitely. So, eastern states in a typical production year, so average to above average, they're still exporting grain, a surplus of grain, which means that their prices are going to be at the world market, or based off the world market,
so
similar to Western Australia. And then domestic prices trading off the world market. Now, when they have a drought or below average grain, and by the way, the domestic use over there is growing every year, which is positive for growers. But when they have a drought or a production issue, and they can't let any grain go on the ship, they need to keep it to consume it domestically, then they'll start to trade above the world market. And the good way to think about that is because, as you rightly say, the WA grower will always be exporting.
Yeah.
I mean, we've seen WA grain go around to the East Coast. So the eastern states will trade a price spread above Western Australia, which will equal, or roughly equal, the cost of executing that ship, loading the ship, taking it around, unloading it, getting it to its destination, and that will end up being the price point for that. So I've always, the eastern states grower actually has, compared to the Western Australian grower, actually has a bit of a drought hedge, a natural drought, I won't say subsidy, but a natural drought, because their prices will go typically $120, $130 a tonne above the world market when a drought happens, which when a drought happens in WA, our grain is still going for export. We'll get some drought premium because there's some markets offshore that really rely on our quality. Yeah. So that we'll get some of that, and noodle you might see much stronger, but it's you don't get the same sort of broad, it's almost they get a bit of protection.
Because technically, you're a lucky boy, so technically, I'd say in some parts of the eastern states, they say WA is always in but we grow this beautiful clean grain. That's right. That dry climate, and those super dry summers generally, touch wood. Does that offer a premium? So there's stories of people shipping out small containers of multi-barley to Japan, or that noodle wheat into Asia and stuff like that. Is there small premiums for growers here that are different because of that?
Yeah, well, I think this is this sort of lends itself to the role that the trade plays, which is hugely important, right? Like they're managing a lot of risk. Like when they buy off a grower, they accept the price risk at that point. So they need to hedge it. And this is why Chicago is relevant, because it's still used as a hedging tool by a lot of them. They'll often use other tools as well now. They need to find a home for it and sell it. They need to try and value add it. And they need to, they're invested in trying to find more homes for Aussie grain. So we want a healthy trade industry, right? We want to make it easier for them to do their jobs, so to speak, which partly for grower offers, that helps them do that, because they can see grain, they can manage their own risk, they can book it, and they can create demand for that grain. So it all flows through. So to your point, there are and I think there's niche markets there that are really Aussie grain specific, albeit that a buyer, you know, and I'm talking an end user now, so a miller or somebody who's actually utilising the grain, they're acting commercially too, right? So if they can get a substitute grain from the Black Sea or from the US, which might be an inferior quality, but they will push the blends, you know, to make it as economic as possible to make their business continue to function.
So often these traders, the people who are buying grain off growers, there's obviously two stuff. There's obviously, we've got a mill wherever it is in the world, we want to buy the wheat, right? And you go find me X tons at this quality and here's your price, right? They're an intermediary of sorts. But then there's this, what you're mentioning, it's almost a speculation, where they're buying and pooling grain and then putting together either lots of blends or whatever to market. So they're trying to clip the ticket somewhere in the middle by putting together unsold lots of grain. Is there different types of buyers in the market in that way?
Oh, definitely. Like, so, you know, the spectrum of buyers that we've seen through the exchange, you know, I mean, you've got your bulk exporters, your container exporters, your domestic end users, your offshore end users, which might not be actively necessarily, pulling grain through the supply chain, but they might still be active in.
So an end user is also like a flour mill somewhere in Asia buying directly off the exchange.
Yeah, correct. And it might be to manage price risk or whatever. Yeah. I mean, again, it's not our job to make assumptions. It's our job to create the opportunity for everyone in the market. The it might be a domestic trader that's just adding to the liquidity in the market and moving grain around and seeing that grain's got too cheap versus where it's trading here, so they start buying, which is a good thing because they push the price back up again and creates that demand. We've seen fund managers in the exchange, right? Like never likely to execute on the physical grain, but either recognise, again, it's not our role to make assumptions, but they're possibly looking at it and going, well, grain looks too cheap in that area, so we're going to start participating in it, and they might be hedging it off or whatever they're doing. So I think that's a good thing for growers. You know, from a grower point of view, and you mentioned I'm from Lake King originally. Like that's my childhood. That's where I grew up. That's still home. It's not where I live now, but it's considered. It's my DNA. But maybe we want as many buys as possible.
The switches have always been important, isn't it? Because I grew up. I was a bit further west than you in Kojonup, but I had wool growing, and we used to admire the liquidity in grain because wool's never had a really liquid market. Right? Whereas grain's you've got so many players in the market that it's a really liquid global market, isn't it? In which you can execute a lot.
Well, it is, but I think what the problem that Clear Grain Exchange is trying to solve is actually the way it has been functioning hasn't been as liquid as what you were saying. It is a liquid market, but we need to actually work at that.
So
to make it easier for buyers to come in. Well, and look, you've mentioned Lake King again. That's Esperance Port Zone.
Yeah.
And often Esperance Port Zone, at some point after harvest, would start to trade at a really big discount to, say, the Kwinana Port Zone, where, there's a bit more domestic use there, container trade, if you like. But that, that's a bigger discounting price than what the natural freight spread would be to keep running a ship around. To let
the internal trucking spread too. You've got
correct. Yeah, which sometimes can be how accessible the grain is. But what's happening there? Yeah. And in my view, the biggest determinant of that price spread was that buyers would start to pull out of the Esperance market because they're thinking that there might not be a lot more grain there left unsold. If I end up a little bit long or a little bit short, then I need to potentially, on the other side of my, equation, I'm a bit exposed to a handful of players. And that's too big a risk for me to keep participating in the market, so they start pulling out. And the whole idea of the exchange is to help avoid that happening, so that if Esperance does get too cheap versus Kwinana, it starts to come back. It generates its own demand.
So I just want to loop back to a little bit of the problem I think you're trying to you're solving with the exchange, but in general, just the power imbalance. There's always, right at the beginning of this conversation, we talked about, I'm a price taker, and this talks to the power imbalance. Is there still an imbalance? Like when we were talking on the phone yesterday, I think I said, is there an advantage, Nathan, in some people to have an opaque, volatile, unclear market signals? Are there players who benefit from having a messy market?
Well, I think information is an asset for sure, and the world knows that, and I think that's the challenge for growers, is to actually spend the energy on pulling out the information that actually exists in the market today, and then keep pushing forward for trying to create, pull out more information so that they can be making, determine what their grain's worth, rather than again, this whole concept of being a price. I don't like that term. I think it puts us off
taking control. So one of them,
take control.
One of the things about taking control is that there's a bit of debate at the moment because of AI and data, and there's some big players out there harvesting a vast amount of data at the moment. And growers also have, at their fingertips a lot of data that most of them aren't using. What's the call? So do growers share this data? Do they use this data as power? This is a bit you speculating, but where do you see growers can take back a bit of this pricing power with the data they have? Because the people who are buying are certainly investing a lot in this market information and in the data around it. So where do you think there might be a possible future here?
Yeah, so I think there's probably two parts to that come to mind. The first one is like the grower or growers investing time in understanding what information already exists out there to determine what the value of their grain is, and then continuing to push forward. So we've talked about, in my view, the best price discovery would be what Aussie grain is actually trading for on the world market. Yeah. Now, that information is often just between the two parties that were involved in the transaction.
It's private.
Yeah, it never comes out. Now, there's a number of bodies around, Middle East is quite often non-transparent, but sometimes quite transparent on there. They'll say this is the outcome of the tender that happened that we purchased. And even though that won't be Aussie grain going in there, it's still quite a relevant data point for us to be going, okay, well, if that was supplied by Aussie grain, this is the price that it would translate to at a Kwinana or Melbourne level. I think that's still helpful. So that there's a lot more information already available that growers, their agents, their helpers, and by the way, this is a role we see CGX or Clear Grain Exchange to help play in, is educating on this and pulling, showing, distributing that. And as, businesses like Argus and Platt, it is still quite undefined, but, Argus and Platt, say global information houses, that's the role that they're trying to play as well, to sort of bring this.
So if I'm a grain grower in Australia here, so what do you recommend? So I'm sitting here and I go, Nathan, I want to invest in getting a better idea. I want to start learning how to take a bit of market power back. What do you recommend? Where do I start? What information sources should I start paying attention to and start reading and subscribing to? What are the sort of places I should go with? Yeah,
I think, Google. Good. And starting to hunt that information out. I don't really want to sort of say, well, one information provider.
Yeah, no, that's fine. Yeah. But there's what you're saying, there's
avenues out there. Yeah. And then, and again, we'll play our role in that. We see a role in that. But the other part, in terms of, taking market power or starting to change that behaviour away from being a price taker, from actually having a say and an impact on price for growers, something that they can do right now is offer it for sale. Show the market, one, that you have it, and two, this is the price I'm willing to sell it at. And even if you're a bit off on where the global market is and where your price is, that in itself is still a really strong action where growers because then you get the feedback from the buy side. You know, like let's say the global market today is for ASW wheat is actually at $360 a tonne. Kwinana, there's a Kwinana grower. They're offering it at $380 a tonne because that's where they think it is. Even, you know, they might have done their research, they might not have, their advisor might be held. If that's the target or fits for their cost of production, etc. Whatever comes into making up that price. But by getting it out there, you know, the buyers might have the opportunity then to give you feedback on that offer.
Yeah,
you know, they might bid you $370 and straight away the grower's like, okay, so that at least you've pulled out that price discovery from the market. Give the buyers the opportunity to do that.
So is sometimes, you know, my inclination is I'm an experimenter. So the way I would do it is I'd get on there and I'd just start trading something, right, just to get a feel for, you know, and I suppose that's what you're saying. Just put something up there, start getting a feel for how the market works, start learning, putting some price out there, and you might get some success, and then, you know, go like that. So, you know, it's one of those things you have to learn to do. It's a skill.
Yeah, and we shouldn't be scared by it. You know, like if in doubt, start high on your price, you know. And so, you know, selling 1,500 tonne of Timmy Cattle's feed barley, we used to split it up into parcels. We might put it up in 300 or 400 tonne lots, you know, at different pricing points, because nobody can predict the market.
No.
You know, I mean, we'd all be billionaires if we could do that. But we do need to appreciate some of the factors that are influencing that. You know, we've just been through a period, I don't know how the timelines on when this gets released versus when
we're on 2024, so we're April 2024. So we're trading way below those 22 prices at the moment, and we've got the world, you know, the news reports are saying everyone's sort of, you know, dropping the planting expectations at the moment. But so what's happening at the moment? So, you know,
yeah, well, one thing that is happening is that discrepancy between the global price and the Aussie price has come back to a more normal level that you would expect. In fact, for some traders, you know, it's hard for them to be making some prices work. Yeah. So you've got that more natural spread in price there. In terms of, you know, the global and what's happening, I mean, there's been a lot of risk taken out of price. So the expectation is that we're going to grow more. Yeah. Now, and most of that's in corn.
Yeah.
So for wheat, actually, you know, if we use the United States Department of Agriculture and put it out, at least there is an entity putting those estimates out that then everybody can say, oh, we don't agree or we do agree. Yeah. But, you know, their wheat stocks to use, without China in the equation, is expected to decrease.
Yeah.
You know, so that would imply that we've got less wheat available in the world at the end of this year, yet our prices are coming off. And part of that is because the USDA, the market is expecting, because I can say the market because they're reflecting that the prices coming off, are expecting that we're going to have this big corn crop. Now, the reality is the corn crop's only just getting planted in the US, and the estimate and a big buffer on that, or a big part of where that increase in supply is coming from year on year, expect it to come from, is the US and Argentina. Argentina have completed harvest or are completing harvest, and, you know, only 2 weeks ago, whenever the last USDA monthly report came out, you know, private estimates are sort of saying, well, we think they're 5 million tonne too high. You know, that's a 5 million tonne in a sort of 20 to 25 million tonne equation that we're talking about.
Yeah, that's a lot.
Yeah, so, you know, it's now, so I think the market has really taken out a lot of risk in price, yet crops are still largely unknown, and you know what it takes to grow a crop.
Yeah, but even in Australia, like, you know, we don't know. It's a bit dry at the moment, you know, but most of the stuff's getting in the ground already. So we got no idea, really, have we? You know.
Yeah, so I think there's, you know, we're seeing it now where I think a lot of that risk has come out of price, but now there's sort of a realisation that, hang on, there's still a lot of risk to go here before we're assured of the supply coming in So buyers are starting to engage again, and we're actually seeing prices start to.
But it is hard. I mean, this comes down to the normal difficulty of being a grain grower, isn't it? So at the moment, you're sitting there and you're running into seeding in most of Australia, and the price is a bit soft. You know, input prices haven't come back from 2022. They're still, apart from fertilisers, pretty reasonable. They're not reasonable, but fair. So, you know, the input costs are still pretty high. So you're trying to make planning decisions based on. So it is, you are trying, you know, that's the difficulty being a grain grower, really, though, isn't it? Like, trying to make that call. You know, yes, everyone's taking all the risk out of grain, but you know, how hard do we go?
Yeah, I think they've taken the risk out of the price, but like to me, you know, and this is the other part of bearish market, and I say bearish because that's the emotion in the market, which means prices are often coming down. A bearish market can be self-fulfilling.
Yeah,
Why?
well,
Because buyers are sitting there, well, I'm not going to buy much now because the market keeps coming off. So I'm not going to stand in front of it. Like, why would I? I'll just buy my bare minimum that I need. But then that sentiment could say, in my view, in the last 3 to 4 weeks, we've started to see buyers go, okay, we actually need some grain now. And once the buyers start to buy, then all of a sudden it's like, oh, hang on. And they start jumping over. So yeah, like to me, Aussie grain is in a really healthy, and this is long term now, just change the focus long term. I mean, global consumption continues to rise. It's supply that's volatile around that, which is the major determinant on price, which is unpredictable. But the fundamental of consumption continue to increase, and a lot of that consumption growing through Asia. For us, we're in a good spot here, and we grow a good product. And, you know, our supply chains are pretty efficient. You know, like I love what CBH do on the whole, you know, on the premise of it, trying to keep that execution cost low from getting it to farm onto a boat. That's a really key metric, and that's value creation straight away.
Well, that's one of the great advantages you know, you mentioned the Ukraine a few times, apart from the war they got going on at the moment. You know, they've always been grown very high quality grain and a lot of it, but they don't have that you know, that infrastructure that we almost take for granted in Australia. They're just moving grain from farm to port. It is a big advantage, isn't it?
Yeah, I think so. And, you know, you would expect that advantage is going to diminish over the long term as more capital flows into that, albeit that right now the political uncertainty.
Political stability is capital.
It's massive as well. So,
yeah, but we are in a good spot. I know grain growers have had a good couple of, more than a good couple of seasons, some good seasons, especially post-drought on the East Coast, which is nice.
Yeah, and obviously, you know, this past year has been hugely challenging for growers, and it's just, you know, how quickly things can turn. It is constant. You know, they're managing risk all the time.
Well, the gap between 22 and 23 for growers was huge, wasn't it?
Yeah, so, you know, and that's where I just feel, even if we've got big crops and high prices, we still need to be maximising the return on that crop in any year, because that's agriculture. We have, you know, you're going to have that volatility from season to seasons, and the challenge for growers is to manage through that, you know, over long term to make sure that they're profitable and good, strong businesses, and that's hard. And, you know, and it's also something that they should be really self-confident about as well, because they're largely doing it really well.
Yeah, they are doing it bloody well. I mean, people come from all over the world to watch how they do it here. So it's yeah, they should be confident. Now, mate, to finish off, a bit more fire. I always ask guests about myths, right? So agriculture is one of those places that's just full of myths, right? Do you have any myth that comes to mind? It can be a grain industry myth or a farming myth that you think, yeah, that needs to be dealt with.
Well, we've touched on it a lot through this, that price, you know, price taken.
Yeah.
You know, and I think that if I just pull that apart a bit more, Australian prices are determined by the global price, and there's a lot of impactors that are going on to determine the global price. So actually everyone that participates in the grain market is, if you like, a price taker.
Yeah.
So it's not a, I think this us and them at times mentality, so growers feeling like they're getting robbed by traders or traders feeling like that. I don't think that's healthy. You know, actually everyone's playing a role here and everyone takes on a lot of risk.
And everyone has
in
much
doing
money.
that.
You know?
100%. Otherwise everybody's commercial and you can't blame anyone for that. But I feel, you know, we could make market forces operate more efficiently than what they are. And I think that's the, you know, I mentioned I was at UWA only a few weeks ago and I said to the, you know, a big message to young people, and not just young people, but everyone that are already working in agriculture is we haven't worked it out yet. We've done pretty well. You know, there's been improvements along the way, like people that are working in the industry and people that have worked in the industry, there's been improvements all the way, but there's so much more value creation to come. And the role that we focus on, we think we understand well, is creating a more efficient and a secure market for ag commodities, you know, because there's value creation in that. If you think about how that then flows into supply chain efficiencies, people able to manage their risk and get that price mate, that's, you know, there's heaps of upside in that.
Yeah.
And that's what we're pretty motivated by, mate.
Right, bloody great. All right, last question, mate. What do you do when you're not up to your neck in agriculture, mate? So, you know, you're not a like king boy anymore. You're a city boy. You've probably got soft hands and everything.
Callous.
You got a callus. You're token callus, mate. It's probably from sweeping the leaves on the back lawn.
I think it was something like that. Like, I think it's
So what do you do when you're not in ag now, mate? What do you?
Well, I've got a young family.
Yeah.
So, and obviously, we never finished the CGX story, but we privatised, so we're no longer owned by the New Zealand Stock Exchange. We're a private business now, which I'm the managing director of, and major shareholder. Elders Limited now a 30% shareholder in the business and been a great shareholder, but just really maintaining that independence in the industry is critical for us. So that has, like, there hasn't been a lot of extra time outside of work and family, like through that period. And we were building a house when we moved back here, mate, which was a lot more intense and involved than what I had imagined it would be.
I think people build a house.
Yeah.
They're going to do it again. I reckon that's why no one moves. I'm not going to do that again.
But other than that, mate, like now, life isn't like, so a big focus for me, mate, now is, I mean, work-life balance, again, it's another overused term, but that's quite real. So being able to spend more time with the family. So my kids are 8, 5. My wife has made huge sacrifices in terms of other things that she might have wanted to do to allow our business to Clear Grain Exchange to do what it has done. So it's more about, like, that's really my priority at the moment, mate, is trying to continually invest in the people in our business and Clear Grain Exchange so that I'm less relied upon within the business so that I can make sure I'm giving back there first and foremost, and then that'll ideally, mate, spread to other things as well.
Definitely, mate. Well, you've done a great job, and the company's a credit to you, and well done, and thank you very much for joining us today, mate.
Thanks for having me.
Thanks, mate.